Gentlemen, an important piece of information coming in so far as India's economic trajectory is concerned. Well, according to the first advance estimates, India's GDP growth is projected to slow sharply to 6.4% in FY25, and that is down from 8.2% in FY24. Now, this marks the slowest growth rate since the pandemic. The real GVA, that is the gross value addition, is expected to expand by 6.4% in FY25, and that is down from 7.2% in FY24. Now, in contrast, the nominal GVA is projected to grow at 9.3% in FY25. That is slightly higher than the 8.5% projected growth. Now, sectorally, agriculture is going to see a notable rise in growth, that is to a 3.8% as compared to 1.4% last year. But the most important sectors that are expected to report, most sectors, I beg your pardon, are expected to report lower growth percentages. But what does this really mean for the economy, the Indian economy going forward, especially because the government has stated that the Q2 GDP blip that came in was not the whole picture, and that was perhaps only for a short term. We decoded that question on what really is next for the Indian economy going forward with experts. Let's listen into what they had to say.
The growth was expected to come down in any case, in 24-25, because you had somewhat lower fiscal stimulus, and also on top of that, monetary tightening also was playing out. So that was bound to bring the economy from above trend rate of growth last year to close to trend. Now, what happened was that in the second quarter, GDP slid much faster than expected, and one of the reasons was slower government infrastructure spending or capital spending, so to say. Now, what this estimate suggests is that, one, that the rest of the year is unlikely to make up for the investments that were not done as scheduled earlier in the second quarter. So I think I'm not too worried about this growth right now.
Sense is that for FY25, we're going to end up with quite a large miss on the capital expenditure as compared to the revised budget estimate which we got in July. I would imagine that looking at where the numbers were till November, it's going to be difficult to even get to 10 trillion now as far as the FY25 capex is concerned. For FY26, possibly, our early workings are suggesting that we can work with overall capex target of around 11 trillion. So very similar to the budget estimate for this year. And on the lower actual outcome for FY25, that should end up giving us a pretty good growth. And that is something that will then end up pushing the overall GDP growth next year.
This is the time to take hard decisions. And here the question then is that how does one do it? We know that consumption is weak, but would giving more transfers actually make the situation any better? In this situation, I suspect not, because the kind of demand that would be generated by what are called the freebie system is not the kind of demand you really need at the moment. So I think the government would be better advised to continue with its capex push.
All right, ladies and gentlemen, those are the experts. And of course, they were weighing in on where the Indian economy is headed over the next few quarters. Definitely, there are slowdown concerns as FY25 GDP first advance estimates peg the growth at 6.4% year on year. And that is the slowest in at least 4 years. Definitely, it's going to be interesting on what the budget really has in store as far as spending is concerned. And of course, the other big question is spending going to be enough to boost and spur consumption, which seems to be at a low, according to what several experts have told ET Now. And
if you like this video, then like, share and subscribe to ET Now.